Good evening, Stock Devils. It's a dark day on Wall Street once again. Here we are. It is currently 8 o'clock Eastern Time on Tuesday night. I want to walk you through a couple of the charts on the indexes, and then we'll do our review and picks in a separate video tonight. Not much good to talk about. I don't think there's any question that it was an ugly day, and it got uglier as the day wore on. I happened to be watching both the markets and CNBC when Tim Geithner gave his speech today at just after 11 a.m. Eastern Time, and I can tell you that I watched the Dow Industrials fall a good nearly 150 points in the first half hour of that speech, and they kept on going down, as did the S&P 500. I don't think there's any question that whatever Wall Street was looking for or hoping for, they flat out did not get it. They didn't hear it, and they didn't like what they did hear, and they reacted pretty negatively all the way around. In fact, if you take a look at the total landscape of stocks, industrial sectors had no advances. Industry groups had no advances. The NASDAQ 100 had 3 advances. The S&P 500 had 9 advances. That's 9 out of 500 stocks going up. Good luck finding those 9. The Dow Jones had 0 stocks up today. Every single component of the Dow Jones was down, and high-profile techs had no stocks breaking to the upside at all. There isn't much you can say about this, except that there are 4 emotional factors that drive the stock market: fear, greed, uncertainty, and doubt. And obviously we don't have greed in the market right now, except for short sellers if they're in existence. But it should be pretty clear that fear, uncertainty, and doubt are driving the markets right now. And that is why as you look at this short term, this is a monthly chart of the S&P 500. The downtrend followed by a slight uptrend, followed by immediate down, followed by up, followed by down. We are on a roller coaster. You're unquestionably in a range on both the Dow and the S&P 500. In fact, if you go back to the initial fall in January, just before the inauguration, I think you can pretty much see this line right here, which is about 860-ish. Seems to be the bar that's giving people the most difficulty. We get up to around the 860, 870 mark. The S&P 500 isn't holding it. So I would call that a high water mark going forward. If we can get up above that, we might see some type of a rally to the upside. On the downside, the S&P 500 finished here, which seems to be a fairly strong support level. That's the 800s, the 820s. So believe between this 815 and 825 mark, the S&P does continue to hold steady. So my advice, with the exception of one stock I think that we've selected for tomorrow, generally speaking, we're going to steer clear of the markets tomorrow until we get some settling out on this day. This was an unexpected event. The Obama administration and the Treasury and the Fed had done a lot of sowing the seeds to lower expectations heading into today. That there was no magic bullet with this bank bailout plan, and that what they were going to propose would be incremental fixes to the financial system here in the United States. And obviously, based on the market's reaction to that, that news was not welcome in any sense. So tomorrow will be an interesting day. I would watch for a potential parallel, and I'm going to back out to November here. One more time. I would watch to see if we get this back-to-back action tomorrow. It will be this was the original November capitulation low. That was the day that the Dow, the S&P 500, the Nasdaq, they all went down significantly on November the 20th, and this was the instant rebound day on the 21st. So it'll be interesting to see if we see this tomorrow. That would make me feel a little bit better about today's fall. If we can see a rebound to the upside, and I don't particularly care if it gets much more than 840, but if it can get back somewhere in the 840 mark or above, at least that will give us a better support line moving up. But that's what I'm going to be watching for tomorrow. So that's the S&P. You can see it's in this range right here. That's we'll call it 880 and about 820. So you've got a 60-point range, which tells you that the market has uncertainty. It has doubt. So the best thing that you can be doing is looking for fast, profitable trades that you can turn. Buy and hold right now, not the best place for your money, because if you have been in it for a long time, if you've been holding, you could certainly be buying and hoping for the upside, but the problem is if you're on the downside, you may have a very long wait to get back to break even for stocks that you have that have turned negative. So keep your eye on the markets tomorrow. Let's pop over to the Dow Jones. And you see exactly this, a very similar event occurring. However, the difference between the two, you notice that the Dow has finished really at a new support line. With the exception of those November lows, the Dow is down at territory it hadn't seen in several trading days, but really it had not seen since November. So tomorrow, a very important trading day for both the Dow and the S&P 500. I'm hoping that we see this rebound to the top side, get a rebound up anywhere up over 8,000. Otherwise, quite frankly, there's nothing down here to protect anyone. Once the Dow goes below here, there's nothing holding it up. So if it goes below 70, I'm going to call it, what is that, 7,800 down there? That is 78, about 7,800. If it breaks 7,800, it doesn't have anything to stop it right now. And that would be pure panic on Wall Street, and that would be a disaster. So let's pray for one of these bars right here, these topside L's, and keep your fingers crossed that tomorrow is a better day on Wall Street. We'll be back with our picks and review in just a moment.